Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Landon Swan. He's a co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Happy Monday.
Happy Monday to you. It's been, kind of a dour month and a half here for On Holdings. I mean, this stock was $61 just about a month and a half, 2 months ago, Landon, and now we're seeing it just pull back pretty significantly from those levels, about $15. I mean, are you guys seeing the data that kind of reflects this? Because maybe I have an inkling on this, Landon, but maybe I'll ask you about it. Lululemon's been, dour, moving to the downside. Nike hasn't gone higher. That's kind of rolled over here a little bit. Is this just maybe a sector vibe that's going on and not an On Holdings vibe?
No, it's not. Let me get into it, though. So, look, I mean, if you look at what they did on the last earnings call, I mean, they had record revenue. They were trading around 50 or 51 before that report. Jumped up, ran to around 60 or so, and since then it's pulled back down to, 46 now?
Yeah.
So it's under where they were the last time they beat. And so you got to be thinking, that investors have to be thinking, is this a sector thing? Because they're looking at Nike, just like you said, they're looking at Lulu, not going great. But when you look at this chart here, I mean, you got the web visits, the consumer interest, stock chart. They pretty much stay in line with each other, except for right now. We've got that divergence that we always love to see. The stock is moving down. The data is moving up. And so this is actually a pretty good opportunity. I love the fact that, not as a holder, I don't love it, but as a trader, I love the fact that they pulled back from 60 down to 46 after that good report. So they had a good reaction, but now expectations are falling off because a lot of the big giants are not doing so well. But that's not really what's happening. It's not a sector-wide thing. It's OnCloud is just doing really well. They're starting to take over as far as gaining market share. Obviously, they're not going to surpass Nike anytime soon in sales, but as far as the increase over time, that acceleration is increasing, and they've got a lot going for them. So they released this Cloud 6 shoe, which was upgraded, it had better materials, better features, and it was $10 more than the previous version. And there was really no hesitation from consumers, which I think should give people confidence that the tariff price increases probably won't hurt as bad as many people think. I think there's a lot of elasticity here with this, and people are not too price sensitive with this shoe because it's a high quality shoe. It's just premium product, and they're willing to pay a little bit more. They've also started to get their apparel side going. That doubled the last quarter. I think it's around 5% of revenue. They've got a ways to go, but they're focusing on that. So a double obviously is very good. Their direct-to-consumer mix is up to 38%. Obviously higher margins there. They can control more of the process there. Their Asia-Pacific side of things doubled as well. So everything's kind of going in the right direction. And it reminds me a little bit of Deckers Outdoors not too long ago. I mean, their stock was way down. They had a pretty good report, and the stock jumped from 104 to 116. Now, it's since sold off, but as a trader, I love that move. And this setup with OnCloud or On Holdings is really giving me those kind of Decker vibes. And so I like where we're sitting here. I think that we're in a good spot on a bullish position going into this trade.
Landon, this is a story of the past versus the future. When you talk about On Holdings that is 1/6 the size of Nike in terms of shares outstanding or market cap. This is a company that showed 100% growth a year ago, but it dipped down to 9% growth for this year. And then they expected 26, 27 to go back up to 30% growth. But Landon, I'm a gym shoe guy and I'm a health club guy. And I can tell you that this shoe is popular on people that are out in the world and in an environment where gym shoes, dressy gym shoes, casual gym shoes are more popular than they've ever been. This shoe, remember, it's made, it's a foreign company, but this shoe is incredibly popular. And if you're Nike, you should be shaking in your boots about how this David and Goliath story. Remember, the reason that that's a popular story is not because Goliath won. Remember, so I think this is a really popular story about On Holdings, and they did take a dip. And you're right, the stock has dipped from from a nice pop after earnings to below when that came out. So I don't know, Landon. I'm not a gym shoe analyst, but boy, all I know is what I see out in the world, and there's a lot of on-holding shoes out there, Landon.
There are, and I tell you what happened. I think Nike kind of took their eye off the ball a little bit. I mean, they were cemented as the shoe pretty much for all uses. Running is what got them there, and they kind of went away from performance. And you can see here on this chart, I mean, they're at the bottom here as far as year-over-year change, and you've got Alo Yoga and OnCloud right there at the top. They're the ones that are disrupting things in apparel and then in shoes, respectively. And so, yeah, I think that Nike's just kind of opened the door, and they did it because they focused more on endorsements and look rather than functionality. And ask anybody who tries on OnCloud for the first time, they're like, whoa, these are really comfortable. And if you're talking about, if you're on your feet all day, if you're going hiking, if you're going running, it's the choice, absolutely. And it's, they're great in the gym as well. In fact, there was a survey they did with, they asked people, the top 9 shoe brands, why they picked this particular brand that they have. And for the running and jogging category, OnCloud was number 1. For the training and hiking category, they were number 1. For office wear, this is weird, they were number 1. The only one they didn't dominate was the casual wear. They were down to number 6. But for all of those other use cases, which is really performance driven, you've got to be comfortable for all of those kinds of things. They have dominated. They are the number 1 reason. They're the number 1 shoe for looking at the reason why people bought them. So incidentally, Hoka's number 2. So we've always kind of talked about, will Hoka attack OnCloud? Are they nipping at their heels? The answer right now is no, and you can see it in this chart as well. They're number 3, pretty much flat on the year. So OnCloud is pulling away from Hoka and continuing to attack Nike. So I love where they're at. I think it's a great long-term investment. I think it's an even better short-term trade, though, with this pullback. Maybe there's something that we don't know, right? I mean, we like to measure consumer sentiment, top-line revenue, things like that. And so we don't have the entire picture. We don't have the expenses side. We don't know, some of the macro conditions and tariffs may be playing into this a little bit. But overall, the consumers love this product. And for, that move down to, 25% off of highs, lower than it was before they had a great quarter. I like this trade here.
And full disclosure, I am a convert. So, yeah, that's all I buy now. They're amazing shoes, but my other last brands were amazing. Landon, if you look at wholesale, accounted for nearly 62% of their sales. Direct-to-consumers actually grew. The DTC grew about 4% last quarter. Are you seeing any signs that the consumer as a whole is weakening, because that can negatively impact maybe what they're seeing? And do you have an earnings score in this one?
Yeah, we have. I think overall we've seen just general consumer weakening overall, not necessarily in shoes or apparel, just generally overall. So if you want to factor that in, that I think weakens them a little bit, but still 25% off highs is overdone in my opinion. Our score on it's plus 25, which is bullish. Based on the way I'm talking, you guys would have thought I was 50 or 60, but
yeah.
The data is strong. I think some of it may be baked in and expected. But that price move down tells me that there's a lot of room to the upside for a surprise. So I'm moving into this one pretty confidently.
All right. Great stuff. Great data. As always, Landon, appreciate it.
Thanks, guys.
All right. That's Landon Swan, co-founder of LikeFolio, breaking down on holdings. And Kevin, it's not surprising when they see moves like this that